Hi, good morning to all of our viewers and good morning to you, Varun, as well. And like you said, it is a brand new show, the newspaper show, where we get to the top headlines right off the press. Your daily dose of the newspaper headlines. That's what we've got for you on this half an hour show. A sneak peek into today's top headlines right from the Economic Times that we've got right here. And let's get on board with the top 10 headlines that are there on the Economic Times. And first up, the ADB has unveiled a $1.5 billion COVID package for India, and that's the top headlines on the Economic Times. Is the front page news. Apart from that, you have Modi that's pointed to Himachal Pradesh model for the red zone districts. It's a gloom coming in for the economy. You have Panagaria, who's against a big bang stimulus. Apart from that, you have Fitch and Moody's, both of them going ahead and slashing the economic growth rates for India to as low as 0.2%. And apart from that, you have the top NBFC bond sales that hitting a speed breaker on back of the COVID-19 issue. Varun?
Right, Cheryl, and just while we're on the subject, it's just so nice to hold a newspaper again, and I'm going to continue walking you through what's happened this morning. So the next big story is obviously that the lockdown on the auto cores really seems to be hurting them, and they risk losing billions in exports. So it's quite a large development in the auto sector. And moving forward, another major story coming in the paper today is that of Axis Bank's Q4 result, huge spike in provisions, and of course that mega deal with Max Life Insurance. Moving forward, we're talking about some more commodities and auto companies. We're talking about Mahindra and Jindal Eco needing economic revival post-lockdown. So in some cases, this impairment has been so high that people really need some kind of fiscal help or stimulus. Moving forward to IT a little bit, the IT and BPO gets work from home relief, so that's pretty good. And then finally, the small MFIs, they really seem to be in a spot of trouble, and they seek the FM's help to convert their loans and dues into equity wherever possible. So where debt can't be serviced, they'd like for it to be converted into equity. Those are broadly the top stories for this morning.
And apart from the top 10 headlines, let's shift focus now to the ET markets page. And what's the top headlines all coming on from the ET markets? First up is the alternate investment funds that have sought clarification on that particular investment, the FDI investment issue. So you have the alternate investment funds that have gone ahead and sought for some sort of clarification on that front. Apart from that, you have Reliance Industries that's making headlines today as well. The rights issue may help Reliance Industries actually become debt-free by March 2021. Apart from that, you have the earnings calendar and the earnings candidate Axis Bank that posted a surprise loss in its Q4 earnings yesterday, a loss of about 1,400 crore rupees. Apart from that, you have BSE that will offer a negative pricing for commodity F&O, and most SIP returns at less than 10% annually on back of the entire COVID issue and the impact that it's had on the markets.
Right, Cheryl, that's just some really interesting developments, especially on the SIP front. You got to wonder where people aren't getting paid in many cases for, quite a few months this time. How are these SIP flows really going to continue? And of course, we all know what happened with Franklin. But moving forward a bit, we're now going to get you a quick corporate roundup of what's happening in the corporate world as far as the newspapers go. Tata Steel UK Europe unit may not get support. So obviously, we're talking about the global companies that are asking for fiscal support. They may not get what they're asking for. Moving forward, banks and NBFCs stare at an MFI default, so it's quite a key story. I'm going to bring you more on it later. But in short, as we've all heard, liquidity concerns aren't a problem for the larger banks, but they always turn out to be a problem for the smaller players, and that's what's happening right now. Thirdly, PNB, India Infoline offer top-up loans with riders, so some relief coming in there. Your FMCG companies take direct route to customer homes, so some FMCG companies exploring direct delivery to their customers. And also, Motown takes a corporate bond route to raise funds, so something we traditionally don't see, but even within auto now, the need for funds is leading companies to explore corporate bonds as an avenue as opposed to traditional borrowings from the bank.
All right, then those are the top headlines on the Economic Times, on the market page, as well as on the corporate front. But let's get you the lead story on the Economic Times this morning, and that is the ADB unveiling the $1.5 billion COVID-19 package for India. So let's dwell a bit more on this particular story and what this means and why are they doing this and where will the money actually go. So ADB is definitely in talks with India for more aid for the specific sectors. So $1.5 billion is what the COVID package for India as of now consists of. Is also in discussions with the country's private sectors to provide support where it is actually needed. Remember, the entire economy is in a stress because of the COVID-19 issue. The multilateral lender, that is the ADB, has begun consultations with the Indian government on providing package support for MSME sectors as well as for the infra projects through guarantee schemes, credit guarantees, I beg your pardon. Also, this will be in addition to the package that was announced yesterday. $1.5 billion is the package that ADB announced yesterday for India. Apart from that, they are also in discussions with the various sectors, also looking in to support the MSMEs as well as the infra projects through credit guarantee schemes. So a sigh of relief coming in for India, Varun, on that particular front.
Right, Cheryl, definitely an interesting story. We're really looking for stimulus wherever we can get it. Our government, compared to the rest of the world, has been very conservative and barely given anything so far. Now, this also made it to the front page, another story which I'm going to talk to you about, but obviously it wasn't the main story, which is the NBFC bond sales hitting a bump road. So your larger NBFCs were basically set to raise around 10,500 crores. Turns out that they're now exploring bonds to raise this money, and the investors are asking for higher rates. So what this has actually done is it's put a roadblock in for a lot of companies, and the total raised was just 3,500. And in fact, only HDFC Limited, which is the absolute upper tier, was able to successfully complete its issue of 1,200 crores. But everybody else, and even the names of Bajaj Finance, M&M, Tata Capital, all of these firms weren't able to complete their target raise. So it just gives you a flavor for how weak the demand is for corporate bonds. And given all the issues that there are, investors also expect a higher return on their money.
All right, and that is on the NBFC bond sale. The other news that we are actually tracking this morning is from the auto sector. Remember, as reports are also suggesting that the April sales for auto companies is going to be as low as zero this time around, considering the lockdown and also the pressure on the companies. The manufacturing has stopped. Remember, yesterday Maruti came out and said that we had sources, I beg your pardon, say the Maruti may come out and actually go ahead with the production at its plants at Gurugram as well as the Manesar. But talking more about the auto sector and what is there in the Economic Times this morning, that is the locked out auto companies risk losing billions in exports. The industry wants a full supply chain to go ahead and open up. They're actually fearing that China may take away the orders, and this is one of the major issues of Varun coming in for our auto sector companies. But to talk more on that, we're joined by my colleague Utkarsh Chaturvedi. Utkarsh, tell us, what does this mean actually for the entire auto companies? Definitely they are worried about losing their businesses.
Exactly. In fact, if you look not more about the four-wheeler companies. When you speak about the auto companies, it's more or less the two-wheeler manufacturers are really big when it comes to export. If you look at Bajaj, if you look at TVS, even Hero for that matter, these guys export. Bajaj exports almost 40% of what they produce. Hero and TVS also have something around 10% and 20% of what they produce. Then you come to the auto ancillaries. These companies again are very big when it comes to the export markets. They have been across the market. And if you look at the ASEAN market especially, that is a market where you have a lot of the Indian companies. You can look at M&M. If you go to Africa, these markets are very big when it comes to the auto companies. And many of the auto companies have also been trying really to go out and deleverage themselves in case of any kind of domestic market collapse, and that is what is really troubling them. Now, when you speak about the companies really starting production, that is one reason why the companies are starting production. If you look at what Bajaj is also trying to do to start production in Waluj, so they have gotten permission to start manufacturing in Pantnagar, which is the Uttarakhand plant, and start manufacturing in the Waluj plant. They're not going ahead with the Pantnagar plant because many of the vehicles they produce in Pantnagar are vehicles which are of domestic use, and the companies more or less believe that given the fact the showrooms, there's no certainty of when showrooms will open, they really do not need to start manufacturing. But exports is one thing which they have been looking for a very long time to deleverage themselves. And if you look at the competition from the Chinese companies also, when you speak about competition from China, it's majorly in the two-wheeler market. When you go to even South America, the Indian companies, whether it be Hero, whether it be Bajaj, compete with a lot of Chinese two-wheeler manufacturers. And these are the markets, the emerging markets where both the countries, India and China, compete for market share. And as you said, the Indian companies are now worried that they might lose the edge.
All right, thanks for that, Utkarsh. But another story that's made it to the front page today is that of an AIF clarification being sought on account for Chinese firms that are looking to invest in Indian companies. Now, this is definitely a bit of a roadblock because China actually funds a huge portion of the Indian startup sphere. A lot of the capital comes in from there. So if you start asking questions about this money on a repeated basis, it might really reduce their propensity to invest in India. But my colleague Jayesh, who's actually the expert on this subject, is joining in. Jayesh, what do you make on this story? Small slab on the front page, but nonetheless quite important, I'd say.
That's right, Varun. What the story actually says is that the AIFs are actually seeking clarity from the government on account of the new FDI norms that were announced, very recently. Now, as per the new norms, what the government has notified that there needs to be taken an approval for all the money that comes in from China. This is kind of a worry because a lot of Chinese investors have been backing Indian startups, and the entire Indian startup ecosystem has been largely dependent on the money that comes in from China, which is also the largest investor into the Indian startup ecosystem. Now, investors are worried on account of a few things that the government nod that will be needed. Will it be for fresh inflow of a follow-on investments? There are a lot of questions that people are asking because this is going to create a big challenge on the legal front as well as on the logistical front, because a lot of paperwork needs to be moved here and there in order to get these approvals as well as the investment. So that's going to be kind of a nightmare for both the company that is seeking the money and the investor who wants to actually pump in the money. So there is some bit of clarification that the AIFs have actually sought from the government. We'll have to wait and watch what exactly the government responds to, because one has to also keep in mind that Chinese investors pumped in nearly $4 billion into Indian startups as of 2019 as well. So, that is a good sum of money that is actually asking for some clarification on the new norms that are announced by the government.
All right, Jayesh, thanks so much for getting us up to speed with that story. But I'm going to switch to page 4 of the paper now when we're talking about Axis Bank's Q4 numbers as well as their Max Life deal. So the insurance deal values Max Life quite cheaply. It's said here in the paper that that's because of the difficult macro situation right now, much lower than its peers, HDFC, ICICI Pru or SBI Life. That being said, for Axis, it's a really sweet deal because they get entry at such a great price, and it's a brilliant insurance franchise that they're buying. Also, they had their results yesterday, which saw a huge spike in provisions, which actually subdued the profits to a fair bit. But that being said, the net interest income growth, the operating growth, the margins held up pretty well given all the trouble we're seeing. So quite a main block given on page 4 today. I'd definitely give it a read later on.
Definitely, Axis Bank definitely hogging that story. But apart from that, here is the lead story on the ET Markets page, and that is Reliance Industries rights issue. As per Economic Times headline, it's saying that the proposed rights issue may help Reliance Industries to reach zero debt status by March next year, and that's the timeline that the company also, I believe, had given earlier, that they will be debt-free by that particular time. But to talk more on the headline, to talk more what the story means, we are joined by Pankaj. Pankaj, take us through. It's Reliance Industries coming out with, they're actually mulling rights issue for the first time in 30 years.
Absolutely, Cheryl, as you put it across, that rights issue is the big thing this week to watch out for, apart from results as well, which will be declared tomorrow by Reliance Industries. Now, the interesting thing is the point that you were making. So the Facebook deal has happened. It's bought in about $5 to $6 billion for the company. And apart from that, you also have this rights issue, which the company will be doing. Now, whether this will lead to a Aramco deal or not is anybody's guess. It's a speculation at this point of time. But definitely, rights issue means the promoters themselves will be putting in money. Remember, unlike some of the other large groups, Reliance holds a big stake into Reliance Industries, and that's why they will also be putting in money into this. The quantum of this is something, of course, that everybody would look forward to. But considering the market cap, even a 5-10% sort of a rights issue versus their market cap right now at a discount would lead to a huge amount of money coming in. Now they have about they had about 1.5 lakh crore of debt. From that, 42,000 crores will be coming in from Facebook, and then probably you get money coming in from this rights issue as well. Maybe at a discount, but definitely that's something which is on the cards, and that makes people believe now that the deleveraging cycle at Reliance Industries has started. It started with Aramco first, that how they would go ahead with the deal. However, with what's happening in the crude market, there is again question mark whether that deal would go through, how much money would come in, will it happen or not. Then you have this Facebook deal, and now you're having this rights issue where promoters themselves along with other shareholders will be proposed to put in certain amount of money so that deleveraging can be done. The size and the quantum is something that we'll come to know tomorrow, but markets have started to focus on the deleveraging cycle at Reliance Industries, which in March, as per the earlier comments from the MD Mukesh Ambani himself, says that that is something which they could look forward to making a debt-free company.
All right, Pankaj, thank you for bringing that major development. They've just raised money from Facebook as well. So some people are asking questions whether the timing for the rights issue is really needed right now. But definitely the deleveraging play, huge there. Another very key story today on the front page, Tata Steel. The parent is actually now putting a hold on funding some of the subsidiary companies. At least that's what the paper is saying. And this is not a trend that we're seeing just with Tata Steel. We've seen it before. Earlier on in the year, Vodafone parent said they didn't want to infuse any more money in the Indian subsidiary. So we're seeing this trend creep up in quite a few places where there's stress all over the world. The parent companies don't find the ability to fund the subsidiaries any longer. So actually what happens in a time like this is it has to go to the government. The onus goes to the government, and hopefully they'll get some reprieve from the UK government to keep those plants and jobs alive.
Yeah, talking about the stress that even the global companies and the global arms are also having. Apart from that, you have PNB and India Infoline at a time when actually several banks and most of the shadow lenders are conserving the cash. You have India Infoline and some public sector banks such as PNB are offering actually top-up loans to their existing customers, but there are some riders actually attached to it. To take you through it, they must not avail of the 3-month repayment moratorium. They're also saying, although it's counterintuitive at first glance, but the offer actually goes ahead and makes a sound business sense. Not only will such loans offer the opportunity to expand the loan books for the particular firms in these lean times, the precondition will also help prevent or actually delay any delinquencies and non-performing assets on the accounts that were standard before the lockdown actually began. So in today, just give you a gist of the entire story, that is PNB and India Infoline are actually going ahead and offering top-up loan to their consumers in this time of need, Varun.
Yeah, definitely, Cheryl, most definitely. Let's get you quickly up to speed also with the COVID headlines for the day today. So there's numerous ones. The first is obviously that 3 million have been infected globally, with over 216,000 dead globally. So that's absolutely an astounding figure. India crossed the 30,000 mark ourselves, with the death toll here at nearing 1,000. Trump to seek damages from China over the virus. So the US really seeking some financial reprieve from China. Maharashtra with the most cases and deaths, currently at around 8,600 and 369. So we are the red hot spot as far as India is concerned. Over 1 million, though, have been infected in the United States alone. So it's just interesting to see how much worse a scenario they are in as compared to us.
Yes, exactly, Varun. And to talk more about the headlines and the COVID-19 headlines that's there in today's Economic Times, as well as the Times of India, one of them is the fact that the Mumbai police have actually given cops above the age of 50 a paid leave. Remember, you've had cases where you have the police officers also being detected with coronavirus, and some actually fatalities also on that front. So that's one of the moves that the Mumbai police has come out with, saying that those who are at the age of above 50, they will need to go on a paid leave. Apart from that, you have COVID-19 workers will be put on a 7-week course for hydroxychloroquine. Remember, that's an anti-malarial drug which yet the US FDA needs to give a nod when it comes to whether it can cure or provide some sort of relief for COVID-19 patients. Apart from that, Prime Minister Narendra Modi has recommended Himachal Pradesh's model for the rest zone districts to actually get the virus in control. Remember, Mumbai is one of the hotspot areas, along with Pune, and also you have Delhi that has a high number of cases. So definitely a cause of concern for all of us. But Prime Minister Narendra Modi there recommending the Himachal Pradesh models for the red zone districts. Apart from that, you have growth, which is taking a deep dive, and you have a lot of economists, a lot of rating agencies coming out and actually slashing India's growth rate. Yesterday, you had Fitch as well as Moody's that gone ahead and they've slashed actually the India's GDP growth rate. For Fitch, they are seeing India's GDP growth rate at around 0.8%. Meanwhile, Moody's is seeing it at around 0.2% for India. Apart from that, you have ICMR that has clarified that they've not approved therapies for treatment yet. So this is a big clarification coming in from ICMR, that they have not actually gone ahead and approved any therapies for treatment. Definitely COVID-19, Varun, and the news surrounding it definitely getting better for India, looks like it, as days goes by.
Right, Cheryl, we definitely seem to be dealing with it a lot better than a lot of the other countries. At least that's what's showing in the numbers right now. But on this same subject, the paper today also talks about Niti Aayog's Vice Chairman, actually, Arvind Panangaria. And he's talking about the COVID virus in two different forms. One, the spread and the normalization of the curve, and B, what the stimulus is going to entail, right? And in his view, he says that firstly, it's going to take a while for the situation to stabilize. We do have hotspots, which are called red zones, which need to turn into orange zones and eventually into green zones. And there'll be lifts conducted at each zone depending on how the case progresses. He asks people to be patient. At the same time, what he also says is that there's no case for a Big Bang stimulus. So he's done his own studies back to 2008. And when they infused massive stimulus, then according to them, they believe that it had severe repercussions, that the fiscal deficit went up, it created a lot of burden on the economy. They don't want to do that this time till it's absolutely necessary. So his personal stance is that he's going to be curbing fiscal expenditure, and he's really not going to be spraying stimulus all over the place till there's an utter and dire need for it.
All right, and that is Arvind Panagaria's quote coming in the ET Q&A. Remember, Arvind Panagaria is the former VC Vice Chairman of Niti Aayog. But let's take a look at the top headlines that is there on the Times of India. There you go, that's the Times of India, and definitely let's look at the top headlines. That is, in the first, for the city. The BMC will try out cluster containment. Varun, definitely a big news coming in on that front. Apart from that, you have government that's planning a retail chain for rural India. Remember, breather coming in for that particular segment. You have COVID-19 workers, like I mentioned earlier, will be put on a 7-week course for hydroxychloroquine. Remember, anti-malarial drug that is supposedly said that can provide some relief, but yet to be approved by the US FDA. Apart from that, if you see some good news coming in, no fresh cases in Maharashtra and Bengal after May 21. That is the Mumbai University report saying. So definitely a sigh of relief, hopefully, if that report comes true, that no fresh cases in Maharashtra and West Bengal. And apart from that, you have the monsoon, and that is also grabbing headlines. IMD is saying below normal rainfall is likely during June to July. That's it. That's the only period. But remember, IMD gave the initial forecast saying that we will see normal monsoon rainfall. Varun.
Right. Thanks for that, Cheryl. And now I think we have walked you through everything that's really of note in this morning's Economic Times, and it'll be something we're going to be doing going forward, me and Cheryl here with the rest of our team every morning, while we all really miss the read, touch and feel of a real newspaper. So with that, we're nearly out of time here today. We have a very special segment before we let you go on what's happening with the impaired worker space. Do listen in.
A very good morning. Welcome to this edition of News for the Hearing Impaired. I'm Rukma, and with me is Sonia. Let's begin with the headlines. Union Health Minister Dr. Harshvardhan says no fresh COVID case in 80 districts over the last 7 days, while the doubling rate of infection has reduced to 10.9 days in last 2 days. Says manufacturing of PPE kits has started in the country. Active cases of COVID-19 in India crosses 22,000 with 937 deaths reported from across the country. Over 7,000 patients cured and discharged. Prime Minister Narendra Modi discusses COVID-19 pandemic with Indonesian President Joko Widodo and Canadian Prime Minister Justin Trudeau over phone. Says close cooperation between India and these countries will be important in dealing with the challenges posed.
Where the mind is without fear and the head is held high, that's where I want to be. So LIC for me and my family. Why go anywhere else?
We are journalists.
We are journalists.
We're journalists. And being journalists, reading and writing is a major part of our profession.
The more we read,
The more knowledgeable we become.
and we bring to you
News and current affairs every day. Inculcate the habit of reading in your child early.
because knowledge keeps them informed.
And an informed citizen